Short exercise 5-A. We're going to prepare a merchandiser's income statement. So going back to our original formulas for the three financial statements, we've got the income statement, statement of owner's equity, and then balance sheet. In this problem, we're working on the income statement. So the very basic formula is revenue minus expenses equals net income. But now that we're working with a merchandiser, our income statement is going to have a few more steps to it. So we will still start with the revenue. First, let's read this. Carissa Communications reported the following figures from its adjusted trial balance for its first year of business, which ended on July 31st. So here's our data in a random order. So just because there's a number here doesn't mean it goes on the income statement. Remember, the only thing that goes on the income statement are revenues, and then we're going to subtract expenses. So let's find this company's revenues. Looking through here, I see that the revenue is right here. We've got sales revenue of $42,000. I'm going to paste that here. Sales revenue. So now, notice it says less. So we need to subtract. So do you remember the two things that offset or are contra revenues? The two things that would lower or offset revenues are sales, returns, and allowances. So if we make a sale and then a customer returns it, obviously we have to lower our sales because of the return. And then this company has sales, returns, allowances of $7,400. And the other thing that will offset or lower our sales revenue are sales discounts. So remember, a sales discount is when the seller of the merchandise offers to give the buyer a discount if they pay early. So let's see, this company has sales discounts of $4,300. So we're going to take our sales revenue, subtract our sales returns and allowance and sales discounts, and then that gives us our net sales revenue. Net meaning after the returns, allowances, and after the discounts. So when we do the math, we get $30,300. Again, that's $42,000 minus the $7,400 minus the $4,300. So now getting back to our basic formula for the income statement, we've now done the revenue section. So now we're going to subtract expenses. So now a merchandiser, usually their biggest expense is cost of goods sold. So don't forget, cost of goods sold is an expense. That's one thing that a lot of beginning accounting students forget. And cost of goods sold, what that means is it's just the cost of the goods or the products that you sold. So this company sold some products and it cost the company $18,800 to purchase those goods. So then what we're going to do is we're going to calculate a critical number for a merchandiser. It's called gross profit. So the formula for gross profit is you take your net sales revenue, you subtract your cost of goods sold, and that gives you your gross profit. So doing the math, looks like we get $11,500 of gross profit. So this means the profit before any of the other expenses. So once we get our gross profit, then we can subtract all of our other expenses. And one way that company categorize these expenses is they label them as operating expenses. The main expenses to operate the company. Oops. And operating expenses are the main expenses to operate the company, but it does not include minor expenses like interest expense And if this company had interest revenue, that would also be minor and would be located towards the end of the income statement. So let's start here. We've got selling expenses. That's an operating expense, $1,300. And then working our way down, we've got administrative expenses. So selling expenses are the expenses of any expense to do with selling the merchandise, like advertising, the wages of the salespeople, etc. And then this administrative expense, these are expenses related to administration, like the admin person who works at the front desk and also the accountant salaries, etc. So we're going to add those two expenses up. That gives us $4,400. Of total operating expenses. And now what we're going to do, let me close this. We're going to take our gross profit, $11,500, subtract our $4,400, and that gives us our operating income. So this is the income from our main operations, the main part of our business. So when we do the math, we get $7,100 of operating income. Again, I got that by taking $11,500 of gross profit, subtract $4,400. Scrolling down here, we now have the miscellaneous expenses and revenues. They call them other revenue and expenses. Now this part is where my accounting lab is going to get tricky. Down here in this section, notice this section could either be revenues or expenses. So we have to tell my accounting lab that if it's an expense, we have to put a negative here. So let's go back to our adjusted trial balance numbers and see if we can find any other miscellaneous revenues and expenses. They would normally be something like interest revenue or interest expense. So this company has interest expense. So remember, since this section could have been either revenue or expense, we have to tell my accounting lab it's an expense by putting a -20. And this is called interest revenue. Excuse me, interest expense. Now the reason companies put something like interest expense down here below operating income is interest expense is not a main part of their operations. The same way if they had interest revenue is not the main source of revenue, or it's not a main source of revenue for this business. So most people kind of ignore these other revenues and expenses. So then that gives us total other revenue and expenses. And again, because the label says this could be a revenue or expense, we have to differentiate the two. And so we're just going to take this expense and copy it down here. Make sure you have that negative. Otherwise, my accounting lab would think that this is the other revenue. So then when we do our final math, we get $7,000 or $7,080 of net income. And also, you do have a reminder up here. It says use a minus sign or parentheses to show other expenses. So that's another thing you could have done. You could have put parentheses around these numbers. The reason I don't is because parentheses requires more keystrokes and you're more likely to make an error on a test. So this company looks like they're in good shape. They have $7,080 of net income, also known as profit. And that's it.